kick off. Good afternoon, everyone, and welcome. Thanks for joining today's session, which is on the CCCFA and Regulatory Compliance, what you need to know. My name's Andrew Dentis. I'm a lawyer at Hudson Gavin Martin in Auckland, and also the Deputy Chair of Fintech NZ. And for that reason, two things that are very close to my heart are fintech and also complex regulatory requirements. So for that reason, I'm very excited to be hosting today for what should be a great session. Clearly not the only one excited about these topics because we've had a fantastic response to the session, which is great to see. Thanks everyone for joining. A little bit of housekeeping at the start. I think we're all very used to Zoom these days, but you can use the Q&A function at the bottom of your screen to ask questions as we go through, and then I'll direct them to the relevant person at the end of the presentations. So as mentioned, today's session, we're focusing on regulatory compliance. Banks and financial institutions are subject to, as we know, an ever-increasing raft of new regulatory requirements, covering, it seems, every aspect of their operations. And obviously a key example of this is the new suitability and affordability regime under the CCCFA, which comes into force on 1 December after a brief respite due to COVID, was due to come into force, I think, 1st of October. So today we'll hear from industry experts from both New Zealand and Australia who will discuss how these and other regulatory changes will usher in a more detailed and process-driven regime in New Zealand. We'll discuss what this means in practice, and we'll also explore the opportunities for fintech and RegTech to ensure compliance by both lenders and financial services providers more broadly, while also improving overall business and customer experience and reducing compliance costs and risks. So lots to get through. And without further ado, I'd like to introduce our first speaker of the day, Simon Jensen, who's a consultant from law firm Buddle Finley. Simon has over 30 years experience and specialises in financial sector regulation, payments, clearing systems, and manages complex multidisciplinary projects and advice for financial institutions. Simon provides specialist regulatory, corporate and governance advice to most of New Zealand's banks, the Crown, Payments NZ, credit card companies, and a number of other clients, and is also editor of Tyree's Banking Law in New Zealand and former president of the Banking and Financial Law Association. So if anyone is qualified to talk on this topic, it's Simon, and I'll hand over to him now.
Look, thank you, Andrew, and tēnā koutou katoa. Particularly would like to start with a shout out to Aucklanders. You're all doing it pretty tough at the moment, and on behalf of the rest of New Zealand, thank you. As I said to someone yesterday, I suspect it's the first time in my lifetime that the rest of New Zealand has genuinely been grateful for and cared about Aucklanders. So thank you all for doing the mahi and keeping the rest of New Zealand safe so that Jean and I can actually share a room together here in Wellington. So thank you all. Look, I'm here to talk about how lawyers and technologists can help some of the challenges which businesses are particularly faced with what I have described, and I think quite fairly is, an avalanche of regulation at the moment. The CCCFA is just the first or the most current example of it, but it has been a huge trend which we'll see later over a fair while now. At the outset, we'd just like to say, because I mentioned before, I'm joined by my friend and colleague of nearly 25 years now, Jean Turner, here for this presentation. When Jean and I first met, I was convinced that I was quickly going to become a dinosaur and that the future of the legal profession was going to be technology, and that technology would fundamentally alter the way in which lawyers practiced in the relatively near future. Here we are 25 years on, and I think for me the only things that have really changed are I get emails instead of faxes. and I don't have to check the cross-referencing in documents to make sure that the cross-references are now right when I've added a new clause in, because the technology does that for me. Aside from that, I haven't become yet a dinosaur, and I'm not sure how long it will be before that happens. But as I say, something that I thought might have happened 20 odd years ago simply hasn't. As a friend of mine who I've been involved in and who was a technology specialist in one of the banks over a number of years, said, look, Simon, nothing ever happens in business unless there is a crisis. Don't bother getting involved in anything unless there is a crisis. So part of today's discussion is, well, probably the two key themes that I want to bring out of the first part of this presentation is just maybe we have a crisis at the moment, certainly for some of the smaller financial institutions in New Zealand, that the level of financial regulation has just become too overwhelming for them, and the crisis has arrived in which technology might actually be able to help business. But then secondly is that if that is to happen, there need to be some fundamental behaviour changes from both lawyers and the technology profession. And broadly, lawyers need to become less of legal commentators and more business problem solvers, and technologists need to become less salesmen of technology products and, again, business problem solvers. So until we do those things, the chance that we'll actually make a difference is potentially limited. So I can move on now to the first slide. This is an example of what the small businesses in New Zealand are facing and have over the last 18 months. Now, let's not forget, in the last 18 months, we had a 6-month pause during COVID where most regulation and most government departments did nothing other than a COVID response. So that, while it's 18 months, is probably more realistically 12 months of regulation that small businesses have had to deal with. It is just, to be honest, and I do a lot of work for the smaller financial institutions, the building societies and credit unions in New Zealand. It is almost impossible for them to keep up. Quite frankly, it's nearly impossible for financial regulation specialists to keep up with the pace and volume of change. I've certainly seen, and Jean sent me something in the US, which just has the growth of regulation, and it's just a straight line at 45 degrees on a graph. It just is going up and up at bigger paces all the time. I don't know why last term government was sort of proudly said they'd passed more legislation and regulation than any other government before. I'm not sure why that should be a good thing. And in fact, I've said, I think, to a number of government departments and even ministers, they need to be more like Marie Kondo. Everything they bring in, they need to shut something out. And when they hold up a piece of legislation, they need to ask whether it really does bring them joy or not, because in most cases it doesn't. That's just an example of what they have to deal with and therefore the challenges. We can move on to the next slide. The second, sorry. So the next thing that we are finding, and again, which is a challenge, which for particularly the smaller industry, is that regulator expectations are increasing as well. So not only are we getting more regulation, but we are getting better funded regulators, and with more and more regulation. But one of the challenges we had, and that was described to me by a very senior lawyer who's just done a couple of government reviews in Australia, and I think the situation is exactly the same here. What he concluded in Australia with their regulatory regime, and I think exactly the same here, is that we've got a number of, how he put it, as individual institutions who, in a rugby perhaps sense, are all good in their particular positions, but there is absolutely no coach. So they're all on the field, they're quite good at what they do, but they have no coach that's coordinating what they do. And so in RegTech, for example, or regulation, we find that, for example, the Reserve Bank have different requirements, even for non-bank deposit takers and banks, on what a fit and proper test is. They have different requirements between various institutions on what the FMA, for example, on financial advice from the Commerce Commission on what's required for responsible lending, from what the Reserve Bank and others for what's required for anti-money laundering. So you've got multitude of regulators all imposing their own requirements, nobody coordinating it, and nobody really thinking about the end outcome. So if we move on quickly, next slide. This is, and ironically, again, talking to the same senior lawyer in Australia, this is meant to be a good thing, and this is meant to send positive messages to the industry in Australia, because ASIC have been so bad beforehand, but we're now getting regulators who are much more prepared to take action against financial sector. Certainly we've seen it just recently with TSB and a $3.5 million AML fine. We are going, and we've certainly seen the Commerce Commission, particularly on with the credit contracts legislation, becoming more litigious. And the more litigious they come, that's the kind of thing that generates a crisis, that people then start to think, what do we need to do? Because by the time you pay for litigators and expert witnesses and other things, the cost of litigation is eye-watering compared to what the cost of maybe getting it right to start with might be. So then moving so quickly on to the next one. Current priorities. I mean, these are just some of the key things, but again, as we'll talk about later, here are the things that are currently on the plate for most of the regulators. So most of the financial institutions, and as I mentioned at the outset, all of those things have subtly different bits of information they require in order to comply with. So it's not sort of, you know, you comply with your CCCFA ones, and you also sort out your licensing, conduct licensing requirements, or your financial advice requirements. They are all subtly different and require different bits of information in order to comply. So moving on now to the next slide, thanks. So this is where I think the opportunity for RegTech and technology to help. For the first time in my lifetime, at least, that I have seen something in legislation that specifically says that automated procedures are a sufficient way of ensuring compliance with your regulatory obligations. So if you're a director and you've got adequate automated procedures, then under the CCCFA amendments, that is sufficient now to enable you to satisfy regulators that you comply with your requirements. As an interesting aside, and it came up in a recent actually BFSLA conference I was at with a High Court of Australia judge, one of the real challenges that they are looking at in Australia at the moment here is the extent to which AI could create offences for companies. So a company where no individual whatsoever had actually ever had the mens rea or guilty mind to commit an offence, but the AI that's been installed in the company to do jobs or to create processes for the company may actually create criminal liability for a company. But that's the negative side. The positive side is we are now, for the first time, have recognition that technology can be an answer. And quite frankly, given the complexity of our legislation, where you have if this, but not if this, but if that, you know, and it's, you know, we've done it for various banks. You end up with spreadsheets that are, you know, hundreds of pages of long going, which is almost impossible for a human to do easily, if at all. And if we can do that in a positive way using technology, then it's got to make life, particularly for the small financial institutions that just don't have the resources, it's got to be almost the only way in which they can, the future can work for them. So next slide. The key with all of this, and I've sort of alluded to it, well, this is about the CCCFA. You know, we've already identified that the conversation that you need to have with CCCFA is mostly the same, but not exactly the same as the conversation you need to have to comply with the licensing requirements under the Financial Services Legislative Amendment Act. And the information is mostly the same, but not exactly the same to comply with various AML requirements. What technology and lawyers can do, I think, is if instead of lawyers acting as commentators and going, the way to comply with this section is this, and this section is this, and this section is this, actually go, what is your business process and how do we embed all of these things into a business process? And if technology, instead of going, I've got this bit of software that solves the affordability problem, great, but how does it translate that information out that also solves your financial advisory problem, also enables you to make your climate disclosures, also enables you to make your financial disclosures. So how can we create things that, from a customer point of view, for example, mean that you only need to come in, provide one set of information and it's all there and everything is dealt with, instead of having to call the customer back and say, oh, look, actually, sorry, we didn't do our AML verification for you properly. Can you do this? So I think the key to actually making a difference is for lawyers and technologists to understand the business problem and focus on solving that, and not giving, if you like, a legal commentary on what the law now says, but actually what you need to do and how you can make sure that you do it in a coordinated, joined up way that satisfies all of your obligations. And technology absolutely is a key part to that. And quite frankly, again, the same Australian lawyer who's done a lot of work in the blockchain area said, look, actually, at the end of the day, it's only going to be the good lawyers that will survive, because they need to understand the technology. They need to be able to work with the technologist. If you're doing things like smart contracts, then you actually need really smart people to do it, not the people that are actually drafting those contracts now and doing the negotiation. You need people that really understand what the business needs and how to deliver them. So that's probably the one final slide. And before so there are questions the key right now is for a lot of these financial institutions, there is literally an avalanche of regulation that's hitting them, too much for them to absorb. At some point, lawyers and the IT profession can and should get together in a way in which it joins all of those things up and makes that job easier for them, and ultimately makes the job easier for the customer, who is probably suffering because of these so-called well-meaning bureaucrats in Wellington who think they know what the customers need but actually don't necessarily, and are just making it more complicated. Lawyers and the technology people can undo some of that problem, and at the same time give those in the financial sector some comfort that they're not going to go to jail. So on that happy note, I will now pass over to Jean. Thank you.
Thanks, Simon. I loved the Marie Kondo analogy before. And to be honest, at the moment, it feels like when, as lawyers trying to face this regulation, we're dealing with more the opposite end of the spectrum, like those reality shows about problem hoarders. So I completely agree that we need to take a slightly different approach. There are a couple of questions. I know we were supposed to probably leave those to the end, but given that they're around specific aspects of your presentation, it might make sense to deal with a couple of them now. Someone's asked about the new section of the CCCFA that deals with automated processes, and whether or not you need an audit to prove you're in compliance against that section.
Short answer is not necessarily, which is probably a very lawyer answer, but that's the due diligence obligation on directors. And ultimately, from a director's point of view, if they have confidence in your technology people and the advice that you have received at the outset and the way in which it's implemented, then they don't need to audit it. If they have any reservations at all and or want to dot I's and cross T's, then do the audit by all means. But the starting point is they don't have to.
Great, and then this could probably be the topic of the whole seminar, but do you need to be licensed to supply RegTech capabilities to Fintech?
No.
Yes. Well, that's an interesting one, but yeah, possibly a long answer, but generally, exactly, you don't, depending on what that RegTech capability is. And then what protections should be in place to cover the technology business in the face, and downside risk like AI going rogue? Sorry, that was a difficult one to read, but I guess, yeah, the AI going rogue question is an interesting one. What protections should we be putting in place around that, do you think?
Look, it's probably way too early to tell. I mean, from a legal point of view, yes, if you're supplying the AI, you can limit whatever liability you might want in terms of any contract of supply, and that just becomes a negotiation between the supplier and the user. But if you are a director of a company that is relying heavily on AI or multiple bits of AI, it is really probably behoves you to understand how it works and what your risks are if the AI does go rogue.
Yep, agreed. Okay, great, thank you, Simon. So now we're going to move on to Jean Turner from Lawhawk. So Lawhawk focus on helping lawyers and businesses to improve and automate their legal and business processes to improve efficiency and quality. Prior to founding Lawhawk in 2015, Jean was a corporate and finance partner at Buddle Findlay from 2009 until retiring from the partnership in 2014. As well as acting on a number of complex corporate and finance transactions, Jean led a number of the firm's knowledge management and automation initiatives. Jean's been on the advisory board for the College of Law's Centre for Legal Innovation since 2017 and is a regular contributor to the Centre's program. He also has a BA from Victoria University in addition to his BCom and LLB. So again, very well qualified to speak on today's topic. So I'll hand over to Jean.
Thanks, Andrew. If you can bring the slides up, Cara. So I'm going to start off where I began my legal career, and as Simon said, probably spent too much of it in there, which was working in a law firm and giving pretty generic advice on regulatory requirements. I like the way Simon described it as legal commentaries. So these legal opinions, typically very long and deliberately general, and without really any attempt to specifically apply it to the client's processes, which was probably mainly because I didn't actually have any idea what those actual processes were. So these commentaries needed to be interpreted and translated by in-house lawyers, or before really we had this growth of the in-house legal teams and compliance teams, it might have gone directly to the business who had to figure it out. And I'd say to that these opinions are still being given, which I think they are, they're not very useful. Can we go on to the next slide, please? So where a lot of that legal advice that I gave throughout my early career ended up was probably in something like this, which you can see on screen, and that's traditional compliance manuals. So when I first started work, we used to maintain compliance manuals for one of our bank clients, and we had a wall across the hallway that looked pretty much like this, but with nicer folders. And I think these were probably a great source of fees for the firm, but I would say in practice they were barely read, most likely to be out of date, and I doubt that they were reflective of the actual processes that people were following in their day-to-day work. Next slide, please. So a more modern take on compliance these days is what Simon described before, which is to try and translate all of these requirements into an Excel spreadsheet, which has some advantages in terms of being able to search and filter, but in practice they're almost impossible to read. You just can't fit all the columns across one screen in a single view. There's limits to how much text you can fit into a cell. I can never figure out how to even adjust the rows heights properly. They're definitely impossible to print, particularly if you haven't got an A3 printer, and nobody ever sets up a spreadsheet with the print breaks set in the right place either. So they're really cumbersome format, and you're never ever going to be able to get down to the level of covering all of the legislation, all of the regulations, all of the regulatory guidance that comes out, and then what the organisation's views in relation to all that is. So they still remain a summary rather than something that's actually fully able to be relied on. And they're not linked to the particular business process. They're still really a general summary of the law and the commentary rather than something you can actually use as part of the process. Next slide, please. And so what do you do in terms of trying to assess compliance without having that real-time visibility over the process? Compliance teams are still relying on sending out quarterly or half-yearly or annual certifications like this. And the challenges with a form like this is if you request too much detail and you really try and get into the details of things, it makes it really hard for people to see the wood for the trees. They struggle to think everything through, or they fail to complete them, and so that creates its own process of following up. If you try and keep it too simple and high level, perhaps like this sort of short format, then it's pretty easy for someone to sign it off without really knowing what it is that they're signing off on, and that limits the real value of the certification in any event. It's really hard to provide a level of kind of guidance and context in Word documents like this. You want to be able to make that sort of stuff available for people so that they can see it if they need to, but you don't want to clutter it up and distract people who don't need it. And so overall, I think these types of forms end up with a lot of time and effort to send, to follow up, collate them, and you can perhaps make some of that easier if you use digital signing processes, but it still ended up being a pretty kind of basic tool. You don't really get a lot of data out of it, and it's hard to use it for reporting. And if you do find any issues, then it's likely they'll be historic and the damage has been done, and it's probably going to be too late to fix things. Next slide, please. So regulatory requirements are now requiring that you gather a lot more information. That's only getting worse, and there's been a lot of commentary in the last few weeks about the impact that the CCCFA changes are having and the granularity of the information that is now being asked for. This is an example of what we're all familiar with, which is a bank application form in a PDF. And these forms are just getting longer and longer, but a lot of the information that's being asked for is not even going to be relevant in many cases. So on this screen, you can see asking for company or partnership details to be completed only if you're a company or a partnership. So if you're not a company or a partnership or a trust, then you should just get rid of those sections and not see them. This particular form also has stuff in there that says if you've got more than 2 people that make up the customer, then you have to fill in an entirely additional copy of the form. So that's a terrible customer experience. The applications could be coming in still handwritten, illegible, incomplete. There might be additional clarification that's required to be gathered in multiple times. You'll get attachments verifying some of the information sent in different documents or by different means. So the whole thing's hard to keep track of. There's no real data aspect to this in terms of being able to use that for the rest of the process. So someone's going to end up rekeying it, or it'll be copied using a robotic process automation tool into a number of other systems. So you've got additional risks of error and complexity there. Next screen, please. So what are the other options then? Well, there are now alternatives that can not only capture the regulatory requirements, but also really streamline and simplify the process and make for that better customer experience that Simon was talking about. And the first thing that you need to do is just to map the process, the current process. And you can do that with these no-code tools. On a canvas, you can map things out. It's drag and drop functionality. You can move things around to not only show what the current process is, but to define what it could be or should be in the future. Under each step in the process, you're able to put the specific compliance documentation that's relevant to it, whether that's guidance or forms that are to be used. And so those can be easily found and referred to and updated as required. None of this is really AI either, to go to that earlier question. It's not a case of the computer sort of doing something that you don't understand. This is just actually understanding your process and drawing it out. The next important step, though, is once you've done this, you can then look at where that process has the bottlenecks and the opportunities for improvement, and you can turn that into an automated workflow. So the forms that kick off the process can be used to capture the information, and it can be sent where it needs to be sent to. Approvals can be triggered, they can be given and recorded electronically. Documents can be automatically created using the data that we've already got. Documents can be signed using digital signing, and they can be automatically stored in document management systems where they can be easily found. So none of the stuff is particularly revolutionary in terms of like AI or anything complex. It's all readily available. And you can extend this so that the process goes outside the organisation. Obviously, you've got the customers completing the form, but there might be other intermediaries as well, mortgage brokers, financial advisors, solicitors, accountants, etc., And if you're relying on them to be able to do parts of the process and you want to ensure they're doing it in the ways that you're happy with, then they can also be part of the overall workflow. Next slide, please. So technology can take all of those really cumbersome PDF forms and turn them into an elegant and dynamic online form that can adapt to the particular circumstances. So if trusts and companies aren't relevant, then that's no problem. Just get rid of them, record the fact that they're not relevant and hide them from further view. And you can capture information for as many customers or beneficial owners or whoever as needed. So the formatting of a PDF document doesn't have to constrain your process or wreck your customer experience. And you can, if you've got evidence that's required to be gathered relating to any of these things, then you can do that all at the same time. So everything's all kept nice and tidy together in one place. And the software will be able to actually scan the PDF and pretty much create the forms for you. So it's not even necessarily a major job to take something that's stuck in a PDF form and to start turning it into one of these forms. Next slide, please. So because you've now got a process that's been digitized and all that data that's being created and captured during that process is digitized, you could then start to get real-time visibility over what's happening within the process. The software could automate the sending out of the those scheduled compliance certificates, and it could track the responses more efficiently if that's where you're currently at in the compliance process. So it's still just making that compliance checking a bit more efficient. But you could also actually step into the process as a stakeholder and be able to see in real time how it's running and what's going on and if there are any apparent issues. If there is an issue, you're going to be able to see it more quickly. Hopefully you can see it in time where you could actually step in and fix it before the customer suffers any adverse result. I saw a video last week showing a process, a lending process, where if a credit check hadn't been run on a customer, for instance, the system could actually identify that, and using RPA, it could actually send out and organize the credit check to automatically self-correct. And even if you do have systemic issues that are only uncovered later on, you're going to have a huge amount more data that's going to enable you to identify customers that have been affected by that and to get in there and remediate it more efficiently and effectively than would otherwise be the case. And then you can go back to your process map. You can see where the issue arose, and you can put something in to make sure that issue won't arise again. And from a regulatory perspective, if the regulator can see how you're running your process and all the checks and balances that are inherent in it, then they're going to have a lot more confidence that you're doing everything that you prudently can to comply, which will be relevant to the way they assess any issues if they do come up. Next slide, please. So the last slide for me is that I think there is still a role for law firms to be able to play in all of this as well. This is an example from Australia where Gadens have just released a new system. They've built on a platform called Lawcadia, which is a two-sided matter management system that can be used both by law firms and their customers. So in this system, when a non-compliance has been identified, then using a really sophisticated assessment of all the relevant financial legislation, workflows can be triggered that will ensure compliance with the mandatory reporting and remediation requirements. And the law firm can be involved at any stage if needed. And it seems to me that's really useful in its own right, but you could extend the solution to not only start once somebody's identified a breach, but to use it to do some of that surveying and to actually surface when there are issues that need to be reported, if not even to step further in and automate some of the doing of the processes. So I think that this type of a solution has got to be so much more valuable than just those sort of legal commentaries that we started with in terms of how law firms can actually help their clients not only understand what the law says, but how to apply it and make sure they're complying. So that's me done. Hopefully this shows that there are now a number of ways of managing regulatory compliance using technology that's readily available, which is a lot better than what we've been doing in the past and still today.
Thanks, Gene. You had me at let's get rid of spreadsheets, and anything after that was just a bonus, really. So yeah, great, really interesting presentation, and I'm sure we'll get to some of the questions on that at the end. So our next presenters are from Sandstone Technologies. So they're an established Australian fintech that's been providing 25 years of digital banking, loan origination, digital acquisition, and cloud solutions for banks and FIs across Australia, New Zealand, and the UK. So we're going to hear from Sandstone's lending solutions team, Keith Wilson, a business analyst and technology specialist with over 20 years in retail banking and lending solutions. And then joining Keith is Sandstone's head of client advisory, Christian O'Toole. So Keith and Christian will provide their insights and showcase a scenario on how technology can enable banks and FIs to achieve higher levels of regulatory compliance within the loan origination journey. So without further ado, Keith, I'll hand over to you. You're on mute, Keith.
Right.
Always have to have one on Zoom.
Thank you, Andrew, for the introduction. And as we have heard from Jean and Simon, banks and financial institutions face numerous complexities and difficulties of not only gathering the customer's data, but also being able to see if compliance has been followed, and identifying where compliance rules haven't been followed can be a challenge. Australia has been dealing with responsible lending obligations for some time, with a requirement to make reasonable inquiries, do reasonable verifications, and make an assessment to establish the borrowing is not unsuitable for the borrower. Substantial hardship and not meeting the borrower's requirements and obligations are both defined to be treated as unsuitable. The New Zealand approach has the same reasonable inquiries, but instead of the not negative test, applies the positive test that an institution must be satisfied the borrowing will likely meet the borrower's requirements and objectives, and that they will likely be able to make the payments without substantial hardship. And then, differently from Australia, and in a more prescriptive approach, there is the Responsible Lending Code, not binding, but if you follow its provisions, it will be evidence of compliance. Although there are differences in these approaches, which we can leave to the lawyers, the underlying concepts are the same. The responsibility lies on you, the lender, to be able to show that your loan process does not allow the borrower to overcommit, irrespective of what they think and what they tell you. Using the fairly standard example of a mortgage loan application, we are shortly going to briefly demonstrate some examples of how a loan origination system can be built and configured to not only streamline the level of data to be collected, but also to identify when additional data or specific attention is required to meet compliance or policy. But a system should also track what needs to be verified and how it was verified, with any exceptions or assessment discretions tracked and reportable, both to show compliance and to assist with policy reviews. A user processing the application should not need to know all policy and all compliance requirements. The system should collect the data required for the scenario and not bombard the user with unnecessary data fields or compliance checks, while at the same time giving the user the confidence that if something is needed, they will be asked for it. The assessor should be confident that if the application does not meet any policy, they will have that brought to their attention, so that before applying their discretion, they can consider this application holistically in the light of any issues, rather than having to check each and every facet for compliance. And at the same time, know that it is within their delegated lending authority. And management should be able to be confident that policy and compliance aspects have been followed, and where waived or discretion was applied, it was applied only by suitably authorised staff with justifications recorded. There should also be the ability to track, at the portfolio level, the policies most involved with declines and those with the most discretion applied, and by whom. We know most of you will be very familiar with the basic loan and assessment process. So we will jump straight into our brief demonstration of some of these aspects of work, starting with the mostly completed initial application for a home loan. To set the scene, we have received the application from one of the sales channels and are processing it within our LendFast system shown here within the box coloured blue towards the right-hand side. I would now like to hand over to my colleague, Christian O'Toole, Head of Client Advisory at Sandstone Technology, who will begin the demonstration.
Okay, thanks, Keith. I'll just get my screen up and running. So as Keith mentioned, what we're going to go through is a few examples of how responsible lending or any regulatory requirements can be woven into that origination process. First example I'm going to cover, we'll look at the application capture part of the process. Second, we'll look at what an assessor will see when credit policies are triggered and how they can override those to continue. And thirdly, if we have time, we'll look at some document verification. So the first example here, you can see we've got an application, and this view is what your lender would see. If we go to the party section here, we can see that data is presented contextually. We can see the applicants above. There's an individual applicant here and a company applicant, and we can see the relationships between those different parties. Now, regarding contextual capture, we'll load up the individual applicant here. And we can see they're only asked questions or data that's captured is related to that individual. And warnings can be triggered throughout the process. So if this person is change it from a New Zealand citizen to becoming a New Zealand citizen, we can present a warning to the user, and that can also trigger a later check to confirm that that resident status is correct. Similarly, AML questions can be littered through the process. Here we can capture the source of funds that are being used for this particular application, as well as the applicant's source of wealth in general. Furthermore, we can scroll down and see contextual capture relating to other regulations like FATCA. And that can only be, we can trigger that section open and only capture information when it is relevant. When we jump out and look at a company applicant, we can see the data set's different, so that the screen's not clogged up with different sections that aren't relevant. Next, I'd like to show our checklist functionality, or how checks can be done based on the application data to remind the user to do a certain thing, or to confirm that data is correct and ready to go before the application proceeds to the next status. Systems can be designed to check these items, whether it's data or whether it's future information such as document requirements that need to be satisfied. In this example here, there's two checks that need to be done before this deal can be submitted. The first one relates to the company, whether all the AML requirements have been complete. Users can complete these checklists, mark it as complete, and that'll be kept there as a record on the application for the life. We can see who did it, what notes they left when they did that check. Similarly, there's options here. This checklist relates to rent expense because this application is renting, but the rental expense hasn't been entered. If the user chooses to override that, that checklist will also remain as a reminder or as an indicator that this application was allowed to proceed outside standard policy. And this can be reported on when it needs to be reported and pulled out, and to show this application was allowed to go forward, even though it didn't actually meet the standard requirements for the deal. Next, in terms of application capture, I'd like to touch on living expenses. We'll just jump to the financial screen here. We're capturing living expense, and it can be broken down into categories that can then be compared against benchmarks. In Australia, it's typically the HEM benchmark, but it also can be used against the New Zealand government benchmark in the background. And in relation to that, we've also got serviceability calculations they're running. You can see a surplus is indicated up the top here. And when looking at serviceability, you don't want your staff to be doing it all manually. So the system can do it as the data is entered, and it can perform a number of calculations. Here we can see, looking at outgoings and looking at living expenses, this particular application is using the declared value at the moment because it's the lower of two compared to the benchmark. Similarly, when looking at repayments, we can look at the actual repayment required for this deal, plus the sensitized or the assessment rate and the repayment that's based on that. And that assessment rate can be fixed or floating, or it can be compared against a floor. The system should also be able to work out serviceability ratios. So we can look at NDI, DTI, LTI, and DSR, for example, as well as work out a maximum loan in the background to provide that max loan limit for your user. And as data changes on the deal, those calculations should be able to be done automatically. So for example, here I've increased the income for this applicant. The serviceability calculation will update in the background. And we can see the results of that by looking back at our scenario. Maximum loan is increased, the ratios have changed, but also importantly, now the system's falling back onto the benchmark value for living cost because it's higher than the declared value. And so you can have also checks in there. This is a fairly good comparison. We're comparing 2000 to 1900. But if the declared living cost was well below, say they only declared $100, then further checks can be triggered on the deal to remind the user that a proper comparison is not being performed and they need to investigate that a bit further. Systems should also be able to keep records of that. So every time that serviceability runs, a narrative is recorded in the background and we can see how that calculation was done. In particular, the systems should also be able to apply any automated haircuts to the incomes that are being used. And we can see in this example here with rental income, we've got a declared value there of 5,200 per annum, but the weighted amount is actually being used in the calculation to be an 80% value there for rent. Now, the next example I want to cover was to look at an application that's been assigned through to an assessor. So it's gone through what we'd call an automated decision process, where we would capture all the application data that's considered credit critical. We'd submit a call out to the credit bureau, get back the credit bureau reports, run any scorecards, as well as running the credit policy of the lender. So this one's landed with an assessor because we've got a referred decision overall. And rather than have your assessor trawl through everything, we can quickly highlight to them the rules that have failed in the policy and provide them with the tools to either investigate those or to make a decision. Do I allow this application to proceed outside of policy again, similar to overriding a checklist? We'll look at the bottom rule there. The ID couldn't be confirmed, but the assessor has the option to override that. And you'll note that it's not just immediately triggered or set as passed, or it's fail override. So this, again, it's recorded, this didn't actually meet policy. The assessor is forced to choose a reason why, and that's a reportable reason again. And additionally, they're prompted to also include justification notes as to why they allowed this to be overridden. Furthermore, if we do receive back the credit report and the user selects that to view it, the system can record that actually happened and what user actually tried to record that or view that report. Systems should also be able to track data that's used for submission. So here we can see key application data changes, where the system is keeping a track of the information that was used for each decision instance on this application. So it can track what data was changed. So you can see what data is being changed through the life of the deal. That's actually getting it to work or getting it to fit the policy of the bank. You can see in this example here, income was increased. Now, the final example I want to cover today was one relating to documentation or document verification. This application here has been conditionally approved, but we can see there's a number of outstanding items on the deal before it's allowed to be fully approved, and most of them relate to providing proof or supporting documentation. In this particular version here, I'll load up a verification item relating to pay or to income. This module we're looking at here uses AI and machine learning to identify the types of documents, as well as to who that document relates to, as well as the items or the data items that would be on that document that would be of interest. Here we're looking at providing proof of full-time employment for this applicant here. We can see the system's already worked out that there are a number of data items that don't match, as well as some that have. So if we click on this one here for the employee, the applicant's name is Nell Hackworth, and the system said that's a full match, and we can see where on the document that the system identified, okay, that's the applicant, and it does match what we've got here. We'll look at the next one down though. We're looking at salary, looking for 110,000 annually, which is what the applicant declared, but the system can only find that amount monthly, which doesn't quite meet the requirement there. And again, the user can quickly highlight, see where that's done, and identify why there's a difference. Similar with the pay date, the policy here is it's got to be within 3 months of a recent pay slip. And the system's identified this one's outside of that that time frame. And again, the user can quickly highlight, see where that difference lays, and then make a decision. So the system's really helping the user using AI and machine learning and highlighting where differences are so the user knows what to focus on when they are performing verification tasks. I think I'm very close to running out of time, so I'll hand back to Andrew and conclude our demo there. Thank you.
Great, thanks, Christian and Keith. Really good to see how some of this plays out in practice. So thanks for that. Thanks for the demonstration. That brings us to the end of the presentations. We do have a few questions that have come through on the Q&A, and perhaps Simon, you've been pondering over this one, which is a follow-up, I think, from Shane in relation to the audit point around automated solutions. So Shane's question is along the lines that this has been happening in the UK, the US for a while. They require audits of these automated solutions, and so will we be essentially following in their footsteps in New Zealand?
Look, as with all of these things, the standards do tend to get ultimately set internationally. So boards in the US and sadly on some of the stuff, and certainly our legislation often comes from a US-based model, which is completely over the top. And again, what I've said early on in my career, I was thankful that we didn't have anything quite like the SEC and the SEC regulation in New Zealand. We now do. So there's certainly every risk. There doesn't have to be. At the end of the day, the way the legislation is framed here is it is for directors to get comfortable with that. There's no specific audit requirement. The challenge will be, I suspect, particularly in the larger financial institutions, the directors will say, look, I'm only comfortable if it's audited. But that doesn't have to be the case. And again, I suspect there'll be a spectrum of things. There'll be things where the technology is relatively well known, relatively well accepted, and people won't feel the need to, and from a reputable, well-known provider, where people won't feel the need to audit it. The old adage of, nobody got fired for hiring IBM type stuff. And then there'll be stuff which is perhaps more novel, where boards will feel the need to have it audited. But at the moment, there's certainly no legal requirement for that.
Great. And then a really interesting question here from Tevis. Maybe this is one for you, Jane. What happens if there's an underlying reg change? How do you know the workflow if the underlying policy or process has changed? How do you know in the workflow? Do the regulators have APIs that signal major or minor changes and therefore trigger a review of the workflow? How good would that be? If there's anyone listening from the FMA or any of the other regulators, what a great idea.
I'm not sure that I'd want the regulators defining what my business process is. I'd still probably want to be able to see what it is they're asking for and then work out what makes sense in terms of how you deal with that. And Simon touched on that, you've got different regulators asking for very similar things in different ways. And so, ultimately you're in control of what your business process is. And what I really like about sort of those canvas sort of maps of the process, it's actually really easy to see how it works. I don't think there's anything in the Sandstone demonstration that people who work in that area wouldn't have recognised and been able to see what it's doing. So if you come up with something, whether it's because you want to change your business process or there's a new regulation that's come in, or you've just identified a weakness, you can just go in and kind of put something into that workflow and see where it is, and you can test it and sort of see the impact that it's having. So I think it's actually a lot more manageable when you've gone through and mapped out your process. And I've certainly heard of organisations that think they know what their process is, and then when they've gone and actually made inquiries, they realise that there's lots of different ways that people have been able to find to get things done that aren't at all consistent with what they thought the process was. So now they're having to try and tighten up on that. So I actually think it makes it simpler rather than harder.
And I guess building on from that, part of the question was, how do these automated processes or tools kind of capture regulatory change themselves, which is always a challenge. And I think that's always going to be the providers or the regulated parties' obligation rather than the regulator to tell you when that change happens.
Oh, I think so. I mean, I think it's a business process, right? I mean, you just, like, the way I think of it is like, what's my business process, and how do I make sure that it also captures all the regulatory elements that we need to comply with? So it's still the business that has to be responsible for, for their activities, and they might choose to outsource some of that to a system like Sandstone, and they go, well, that's amazing. You guys have just, like, basically built something that does all of the things that my lawyers have told me we need to do. So, I can rely on you to some extent, and then build some other things around it if I need to plug some gaps or whatever. But yeah, I think it's still the business that's in charge of all of that, and making sure they're planning ahead for how they want to not only meet the regulations, but service their customers in the best possible way.
And look, I don't know that that's any different from this situation today. If I think back, for example, when the Credit Contracts Act became the Credit Contracts and Consumer Finance Act, and all of a sudden the disclosure rules that you had around the finance rate, which nobody understood under the old Credit Contracts Act, now being converted into different things, then the technology had to change to deal with that. So I just, and the more integrated and the easier it is to follow, probably the process becomes easier, but I don't think it's any different from what it is today.
Still might need to speak to a lawyer, unfortunately, Tevis, but good question. So,
still do.
and other than a Spurs fan who's sticking the boot into Arsenal, I think, given how bad they are this season, Ruan asks, do you have API functionality within the toolset? And I guess that's a question for Sandstone.
Yeah, we have, like, I don't know what the count is on the number of APIs available, but all parts of the system, we're linking into multiple third-party providers. But we also use a lot of API internally as well, whether it's talking to the lender's core system or to the CRM or to another system altogether. But yeah, also data can be injected into the system from external sources as well.
Excellent. So perfect timing, really. We have hit the end of today's session. Thank you to everyone who presented today. I thought each session was really interesting and gave plenty of food for thought. It's not an easy situation dealing with the sort of ever proliferating regulation. And I think, Simon and Jean made a very good point that New Zealand was sort of slightly insulated from some of this going back, even 5-10 years ago, and certainly before that. But now we are very much looking like all those larger jurisdictions in terms of just the scale of regulation. Fortunately, technology is a wonderful thing, and I think we've seen some really interesting ways that hopefully you can, improve your processes and regulatory compliance. So thank you very much for everyone who spoke. Following the webinar, the attendees will receive a survey, and we'd appreciate if you just take a minute to provide your feedback on that. And a recording will also be made available for those who missed part of it. So thanks very much, everyone. On behalf of Fintech NZ, hope you enjoyed today's session, and looking forward to seeing you at some of our later events. So thanks very much.
Thanks, Andrew. Bye-bye.